If a claim is very, very high, why it's high. The guardrails need to be in place. If these things are so, if you have right checks and balances in place, I don't think it's going to be a bad journey ahead.
Great. On that note, it's all about checks and balances. Thank you, panel. It was a wonderful sort of panel altogether, and hopefully the audience has enjoyed it as well. Thank you again.
Thank
Much
you.
appreciate.
Thanks so much.
I think Chirant made sure that there were a lot of used cases and our panel members contributed immensely. So a big round of applause for this part of the conversation, ladies and gentlemen. Clearly, embedded insurance is the way of future transactions, and what matters is how deeply entrenched you are with your brand partners and the entire ecosystem. And one message is that we are moving from insurance selling to insurance adoption, where volume, variation, and velocity is going to play a key role. At this point, we want to thank our partners who have played a pivotal role in making sure that this event becomes a reality, beginning with our in association with partner Perfumes, our theme partner WhatsApp, our spend management partner Encash, our payment partner Cashfree Payments, our CEO's dinner sponsor HSBC, our communication partner for this fest Calidria, and our banking partner Standard Chartered Bank, PayU, AWS, Kia.ai, Paytm. And lastly, our networking partner for this fest, Buddy Loan. So this was about all the sponsors. And now, ladies and gentlemen, it's time to set the context for our next panel discussion, which is going to be equally exhilarating, stimulating, and relevant on the topic of fintech disruption. The topic of our next panel discussion is going to be centered around future of digital lending in the new paradigm. Over the last decade, ladies and gentlemen, technology has revolutionized industries across the world, including financial services. In India, in the last 7 years, there has been a paradigm shift in customer behavior from offline to online financial transactions, along with the rise of fintech companies that have really enabled and catalyzed this change. The digitization of this process has had mixed results globally, and what we have seen evolve today is completely a holistic hybrid model, where a combination of technology and feet on street offers the most viable and scalable proposition. So with all these massive changes happening, what is the future of digital lending in India? This is the premise, this is the space, this is a realm which we're going to be covering in our next panel discussion, which is the future of digital lending. And to lead this part of the conversation, I'd like to call our moderator, Ms. Aditi Olemann, Director at Cashfree Payments. And joining her on stage are going to be the following set of speakers, beginning with Lizzie Chapman, co-founder and CEO at ZestMoney, Vineet Tyagi, Global CTO, Biz2 Credit and Biz2X, Amit Jain, partner, Waterhouse and Company LLP, Vinay Mathews, founder and COO at Faircent, Gaurav Kumar, co-founder and CEO of Yubi. So with this context, can we give a huge round of applause for this set of panel discussion, ladies and gentlemen?
Thank you. Thank you. And for sure, I don't look like Aditi, right? I think Aditi is on the other side. Yeah. My name is Samir Singh. My name is Samir Singh Jaini, and I'm part of the Digital Fifth. I think in terms of digital lending, the way we understood in 2016-17 when the fintech wave came, today what we understand now is very different. We understood it that you could do new innovations at pace. You can build new models. You think about new data points. You can do embedded finance. You can do everything. And there was a very limited focus on regulatory oversight, right? That's largely how we understood it, right? But of course, things have changed in the last few years. And of course, there has been a dramatic reduction in the regulatory arbitrage as such, right? I think it doesn't exist anymore. The world has changed dramatically. Now, in that context, I want us to all think about what's going to happen next. How would co-lending work out? How would, let's say, for example, there's a focus on reduction or removal of FLD. There are different interpretations happening in the market. Everybody is right now also looking for getting a NBFC license as well. I think things have dramatically changed in this period. I never used to read much about regulation, but I now know regulations by heart. I can read lines by lines, and I don't know what. I never wanted to become one, but yeah, we become one. So I think as we go into this area, I think it'll be useful for us to maybe understand from each of our panelists here a quick perspective on their view. So maybe my request to each of the panelists is if they can quickly introduce themselves, and then maybe spend a minute on their first view on the entire space of digital lending, how it will pan out over next few years, right? So I think we'll start with Aditi. If you just quickly introduce yourself and talk about, and you're not moderating, right? I'm moderating, yeah, fine.
Thank you. Thank you so much, Samir. So I actually lead new initiatives for cash-free payments. We are a payment aggregator and an API banking company. And for us, I think when we say new paradigm for lending, our focus has been how do we enable these new and innovative lending models. We have, for example, Gaurav here, and he'll be talking more about co-lending. So there's co-lending, there's BNPL. So with all of these new innovative models in place, how do we ensure that we can enable disbursements, repayments, the entire infrastructure? How do we support that while also ensuring compliance, right? Especially with the new lending guidelines in place. That has been our core focus. Happy to talk more about how we're going about that. But I think the important part here is, ensuring a seamless experience for the RE, for the regulated entity, for the LSP, for the borrower, and yet being compliant with the guidelines. I think that has been a focus for us.
Thank you, Aditi. Thank you, Aditi. And I think a few years back, or maybe 2 years back, when we said co-lending will scale up, I think we did not know how it will proceed, and it's done very well. So, Gaurav, quick introduction about yourself, your company, and maybe a few thoughts on this subject as well.
Sure. I'm Gaurav. I'm the founder of Yubi. We are building infrastructure to deepen the lending market and the debt market. I think one of the reasons why we exist is because if you look at the lending ecosystem, the debt markets have not penetrated, right? Whether you look at the loans market or retail loan market or securities market. And our thesis was that unless and until you build infrastructure, right, the markets will not deepen, right? Because there is a trust deficit between providers of capital and the borrowers on the last mile. So we are building that infrastructure on the lending side, three parts to our trifecta. The first part is the protocol, where we are becoming the unified protocol for lending, where most of the banks today have integrated. The other parts of the ecosystems are also integrating. The second part is the network. Once you get to our protocol, you get today a network of over 6,000 enterprise, including lending companies. And the third part is depending on the financial product you choose, and there are currently 7 stack on the financial lending side, we orchestrate the digital banking infrastructure. So that's the third node of our trifecta at UB. And as we get in, I'll also talk about what our experience has been and why digital lending is accelerating the way it is.
Thank you. Thank you. Vineet, we met almost 3 years back, and you were entering in the market with your own stack on digital lending. So maybe you can introduce yourself and your company, and maybe talk about what you have learned and what's your view on this segment.
Sure. So thank you everyone for being here. My name is Vineet. I'm the global CTO for Biz2Cred and Biz2X. So Biz2Cred we've been a digital lender in US since the last 12 years. We've predominantly built our own technology stack to enable end-to-end digital lending happening, and we focused on SME lending in US. And about 5-6 years ago, we've focused on the Indian market. And what our learnings has been that as the whole fintech world started booming, there's a lot of digital eruption that happened, a lot of digital nativity that has started happening in India. I think there's going to be a lot of innovation, a lot of innovative thinking that we've all seen fructify till now. It has its challenges, and we are seeing that those challenges are coming to an head now. Regulators are issuing guidelines that are affecting some of the use cases and business models. I think we'll deal with them and we'll move forward. So, I'm going to talk about maybe much later about the learnings that we've had and what kind of new use cases and business models can scale from here on.
Thank you. Thank you. So, Vinay, in terms of, we'll not go in deep, but maybe we know that P2P lending started with a regulated entity structure long back, right? And you have been at the forefront while others are not regulated. You are always regulated, right? So, maybe quickly introduce about yourself and maybe P2P lending, just a very quick view, and we will go deeper later on.
Okay, so my name is Vinay Mathews. I run Faircent. Faircent is a two-sided marketplace, just like any other two-sided marketplace, Ola, Uber, Amazon, Flipkart, Swiggy. So we have two sides of customers, the lending side, the borrowing side, demand-supply side, and large number of customers on both sides. That's the way the marketplace operates. So classically, we are a two-sided marketplace. So what we do is that we originate lenders and borrowers using the existing ecosystem, right? So for example, on the lending side, we have wealth management companies, IFAs, we have wealth tech companies. We ride on them and we distribute the products to their customers, right? There are customers who come directly also, but a majority of the customer comes through these channels, right? Similarly, on the borrowing side, there are DSAs, there are aggregators, there are companies, tech companies who bring in their borrowers to us, and we bring in the journey of those borrowers onto our platform and make these transactions, fructify. So when we started, regulator had put out some guidelines through which this was to kind of be operated. As it moved on, the maturity set in. The program also set in. Maturity kind of came. A lot of big partners also started to come in. Just like any other, Flipkart when started with books and eventually got on to kind of getting Samsung TVs and iPhones sell on the platform. Similarly, for us also the journey has been starting a little slow and going on to mature products and mature relationships. So that's how typically this marketplace works. So we've been in business for the last 9 years. We've done close to 4,000 crores of disbursement. It's all public money. We do close to 150, 200 crores of disbursement on a monthly basis. So that's the rate. Thank you. Thank you, Vinay. And Amit, I think quick introduction from your perspective, and you see a lot of entities from as you are a consultant as well. So maybe quick view from your side will be very useful. I hate to have another consultant on the same panel, but I know you know more than me in that area. Yeah.
No, that's fine. Good afternoon, everyone. My name is Amit. I'm a partner in Waterhouse and Company LLP, and I lead fintech regulatory practice at the firm across segments, payments, lending, neobanks, and others. Now, just to make this point, what are we seeing today? I just want to go back 5 years, like when we had digital payments as one of the segment. We saw significant changes coming in the digital payments across the board, whether it is on security, authentication, data localization, KYC measures. There were reactions, actions from the regulators at times. There were business resilience coming in, whether to adopt, what not to adopt and all. But where do we stand today? We have achieved a lot more maturity, certainty, and the way we have progressed in the entire ecosystem. I think this is where we stand today in the digital lending ecosystem, where there is a lot more, I would say, noise happening. Like, is it right? Is it not right? But to me, it appears that, as always, the regulators have followed a customer-first approach, and with that, they notified these digital lending guidelines with a lot of arbitrages wherever that existed. I think what the emphasis over here is they want to put back the obligations back on regulated entities the way they have been operating, and not only take care of them, but even the partners with whom they want to use for offering these products and services. So I think, to me, I see this as a moment where we actually, once we kind of look back and see what things needs to be corrected and addressed in the short term side, it's going to be a lot more brighter for digital lending ecosystem as a whole to grow in a very responsible manner. So I think that's where I hold my point, and maybe I can take up other points later. Thank you.
Thank you. And I totally agree that RBI has taken a customer-first approach, and I'm all for it. That's just that I work with a lot of startups in different ages, And I think it has been a bit more painful to them at this stage where they've raised a lot of capital. Many of them have millions of customers also on board. And NTC has been category which will get impacted adversely because it's the same category which was never getting credit at all, right? This is sad because I'll give you one perspective. I keep talking about the same thing is that millions of women in India get credit when they are in villages because they are trusted. But when they're in cities and they're homemakers, they will never get credit, right? I don't know why, because they're NTC, right? NTC is the abuse, which I think some of these entities were solving for. But unfortunately, that has not happened. So I think it's two sides, right? It's positive is that it's all going to work well, but there are challenges, right? But I think co-lending has been sort of very powerful, and we have seen a growth of it. I think, Gaurav, if you could just quickly guide us on how fintechs, how NBFCs, and how banks can actually onboard the co-lending journey rather quickly, and how can this scale? So it will be good for us to understand your perspective on that.
Sure. So I think for the audience also, what I'll do is I'll take a step back and more talk about partnership lending, right? Because you're talking about two partners in the ecosystem. One partner which is lending, the other partner is actually acquiring customers, servicing, and performing a lot of roles on the ground. How do they come together, right? So today we are seeing largely three parts. Part one is what is called the partnership lending or digital lending, which is like 100-0. You're partnering with, the other partner, which is now under the RBI definition is like an LSP. Or you are doing co-lending, where you're partnering with another RE, right? And the other RE might be providing 20% of that loan, and you might be the dominant lender. And within that same model, you can actually lend real time, or you can lend at a lag, right? So there are three forms today which are currently prevalent, right? Now, if you take and look at the journey over the last 2 years, the co-lending guideline more or less came out almost 3 years back, right? But why has this started accelerating now, right? And I'll just give you some numbers today. At Yubi, at our platform, we do almost close to 85,000 loans per day, right? On this particular platform. Now, why is that acceleration? So I'll kind of briefly touch upon three things, right? One is on the technology infrastructure side. When you are bringing two partners together, there needs to be significant amount of alignment between these two partners, right? And the biggest challenge was that partner one cannot integrate with so many partners on the other side because your systems have to talk, right? So for you to communicate between the two, you needed a very high quality protocol, right? Where with one integration, you can actually talk to multiple partners on the other side. And if we look at the equivalent, that is what NPCI did, with UPI, right? And led to a rapid acceleration. So that's one piece. Second piece is about how do you manage the entire piece which Samir was talking about, once a partner comes on board, right? Right from alignment, because the customer is being underwritten by a partner on the ground. How do you align accounting? How do you align a lot of those processes, right? Because I think that's been the next challenge. The second cohort I will also talk about, it's not just about technology infrastructure. It's also been about providers of capital coming in. While the focus and attention has been a lot on fintechs, but one of the reasons why co-lending is becoming large rapidly is because the largest of NBFCs and housing finance have now adopted to co-lending as an originator, right? So today, if you look at volumes, large part of volumes in the co-lending market actually comes from housing finance company and not on the personal loan finance, which unfortunately or fortunately constantly remains in the news. But because large parts on the originator side have adopted to this product, the provider of capital is trusting this overall product much more than what they were doing a year and a half back. And last point very quickly, I think the regulation has got reset, right? So if you look at last 2.5 years, the regulator has chipped away on regulation, which means that today, if you look at the digital loan, whether that loan has been originated by your own branch or your loan has been co-partnered on the co-lending model or it has been acquired through a direct assignment, right? The regulator expects you to have the same treatment of that loan the moment you actually become the bona fide lender, right? And it can be any financial product. It can be a securitization product. It can be a direct assignment product. It can be a co-lending product, or it can be a joint digital lending product. The treatment now remains the same, right? I think these, to my mind, has really gone about accelerating. And last piece I will leave it with you, which is our own take, that 5 years, 10 years down the line, we think, given what we are seeing now, almost 40 to 50% retail lending will actually start flowing through partnership on digital lending, right?
Thank you. I think 40-50%. I think it may be higher as well, right? Because that's how distribution happens, right? I mean, why would you put so many branches, so many people when you can originate better and cheaper as well? I think BC model in the villages has been always around that, right? Partners largely do all the processing because the salary structure is also very crucial to the whole process. And then on the ground, you can't hire that many people, right? I think it's difficult. And sitting in BKC is tough, right? Sometimes, yeah. Sorry for that. So I think Aditi, we know that when we are advising with our customers, the biggest challenge is also coming on the implementation side. That how do you manage the disbursement and collections, because fintechs are no longer allowed to handle the money at all, right? I don't know if you have looked at the regulation. It's very detailed. I mean, when we were putting this document out on some overnight, we realized that there's so many changes, right? So one critical was how do you handle cash and how do you handle money, right? So maybe if you can quickly give your view on how it can be handled and how it can be positioned. So repayment and disbursement without touching, can we be compliant, right?
Sure, sure. So I think talking about disbursement first and then repayment quickly. So on disbursement, if you look at the guidelines, there is a requirement that there cannot be pooling of money at LSP level or any intermediary level. So there, our focus has been how do we give the same experience of disbursement of loan, bulk disbursement, and the same experience that the borrower and the lender is getting while also being compliant. So what we're doing there is, enabling multi-party escrow setups with the regulated entity, enabling connected payouts, right? So the same experience that they would get from payment aggregator escrows, enabling the same in the RE setup, right? And here the focus for us is how many banks can you support, right? Because there are obviously also regulatory requirements on the lender can only open, for example, a current account, if there is certain lending exposure and so on and so forth. So there, the focus for us has been how do we provide the same tech stack and the same support while enabling the compliance of money moving from a lender to a borrower, right? So that's on the disbursement. On the repayment side of things, while our soft understanding and our interpretation right now is that the job of a payment aggregator is collections. So we do believe that this will be an exception because we are a regulated entity and, from a compliance standpoint, that is our job, right? Collection of money, making sure it's done in a compliant way. So we believe that payment aggregators would be an exception. But having said that, we also are enabling flows where there can be direct repayments. For example, portability of, eNACH, right? Making sure that there can be direct repayment that can happen into an NBFC's escrow or an NBFC's current account. So essentially, that's how we are looking at it. So, how can we make sure that the process is just as seamless, but we can make sure that the money movement happens direct from lender to borrower and vice versa. So that has been the focus.
Thank you. I think in terms of the implications on payments is very clear, but on an overall basis, Amit, the guidance are very deep, right? And you go about impact and implementation. I think while it is already live, right? I mean, on I think 2nd of September it is already live, which means that all your current, all your new transactions and all of that you are doing, you have to take care of, make it compliant, and also by I think 30th of November they have to make the previous one compliant, right? So compliance and more compliance. So how do fintechs and banks, because both are impacted right now, comply to it? There's also an audit requirement of compliance. How do they go about doing it? And I always believe that there was a outsourcing regulation available which was hardly utilized. So maybe your thoughts on how now we can optimize and manage it well.
Sure, thanks. So there's always this debate around should the regulations be principle-based or rule-based? Should it be prescriptive enough so that you don't leave it for any room of interpretations on the other side? Should it be risk-based? Like which side of the risk regulators are comforted with? I think all of that generally have been the thought process whenever any new regulations comes in. And this time too, RBI adopted a similar approach where they have defined a lot more prescriptive do's and don'ts on some of the functional areas of the entire digital lending process. So I think that's where we stand today, where we know what are the overall boundaries within which the entire processes have to be designed, the partnerships have to be set in, and the customers have to be served, keeping their interest in mind overall. I think the best way, I was just thinking, reflecting on how do we go about on all of that is, I think should we first look back, what do we do today? Like, so RBI has already defined what needs to be done, and therefore, like, let's look back, what are the things to be done? And that's where I think the first journey has to be that if we go back to our drawing board and start defining the entire customer life cycle, starting from sourcing, customer acquisition processes, onboarding, KYC, disbursements, servicings and all. And against each of these activities, if we look back, what are the controls and data access which both partners are doing it, whether it is banks, NBFCs at the back end or fintech at the front end, who is accessing what data, what is the purpose of that particular data to be accessed by the fintech or the banks. I think that's where the importance comes in, like who is the right owner of that data and who should be processing that data. So I think these are the things which needs to be taken care of when actually going back and revisiting all the processes. And once that's done is where the overall sort of commercials and the contractual agreements have to be put in place. There are going to be some changes to the existing setup, the way that the partnerships have remained, like the FFDG is already sort of, the jury is yet to be out, but a lot of noise has already happened in what is going to happen and what's not going to happen. So a lot of these commercials are going to change in the way those have been structured and communicated to the customers at large. And therefore, like, is there a better way to kind of restructure the contracts? And that's why, like, I want to just make a reference again to the digital payments ecosystem, where we have seen a lot of success stories around TSP, like the technology service partners, as one of the entity who supports regulated entities in serving their own set of customers. Can we adopt a similar framework for this kind of a ecosystem as well? So a lot of things have to go back and see in what best interest, keeping in mind what is the expectations that we know, and therefore the innovations can definitely still happen on how to communicate customers what needs to be communicated, whether it is on charges, whether it is on any other terms of the contract. I think that's where, like, the people will have to spend time on innovating a lot of these processes. So I think a lot needs to be done, but we know where we have to get to. Thanks.
Thank you. Thank you. Thank you. And I think from moving to P2P lending, right? I think where we realize is that this was always regulated and other entities had no regulation. So there was a challenge where others could get away with so many things. Now, P2P lending has been somewhere in the sidelines, has done well for some, not for all. There was the idea that this segment will scale a lot, but it's not. Only few entities have done well. So what is the future of P2P lending in this context where you guys are always regulated and you had all the right things happening? So how will you think P2P lending will actually work in the new realm?
So just to kind of clarify, in any tech business, okay, eventually, if you are on a particular line of business, eventually there will be 3 or 4 players existing, right? You take any category, be it shopping, be it traveling, any category, you will see you'll not be able to name more than 5 players, right? So if you're doing a tech play, it's going to happen that way. Okay, eventually it's going to happen that way. Okay? Now coming to the regulatory side of the P2P, we've always been regulated and we've been playing the game as per the rules of the game, right? Now the problem has always been there has been a lot of work which has happened on the acquisition side, on pushing the customer to kind of give a loan side, right? But has been no work on the other side, whereas the collection side, the recovery side, the legal side, right? Which is very important. So I think in future, the way we look at it, the collection and the legal tech is going to be a big emphasis for companies like us, right? And we are spending a lot of money, time, energy to make sure that that happens, right? We had 60 partnerships at one point in time, right? From all tech companies in this country, we used to lend to everybody. We have diluted all of them, okay? COVID taught us that the process of the tech, the process of collection, the process of reporting was a mess. Okay? We didn't use to kind of get customers' data point to report back to the bureau whether the customers actually paid the money or not, right? So this entire thing is becoming a little difficult for the regulated entities. That's the reason this is stopped. It has nothing to do with RBI. RBI had to kind of stop this primarily because at the end of the day, it's very funny. 75% of the lending which has happened with organizations which didn't have regulatory licenses. 25% of the lending has happened with companies which had the license, right? So, and they are the ones sitting with all the losses, right? And the the ones which didn't have the license, they had to kind of just have the exposure 15%. That's it. So from that point, it's not fair. Okay, so suddenly there's a brakes applied, and RBI came along to kind of So having said that, so there has to be a lot of emphasis on the other side, as I said. that side is also very critical. Easy to give money, difficult to get it back. Now, in that context, it is not just about digital. Okay, it has to be phygital. Somebody mentioned just before the so why is it that a microfinance? Somebody mentioned in the panel, microfinance does so well because there is a phygital component to it, right? So we do a lot of lending on the microfinance side. Okay? Great success story there. Okay, so online we do push the money to these partners of ours, and offline leg they run, right? So there is a beautiful combination between offline and online to make this work, right? So there has to be a focus around collecting the money also as we go along. Only then this will work. The spirit of the game is that you have to lend and get the money back. The only, this thing is not to just lend. A lot of people are trying to just lend money and not focus more on the kind of collection part of it. I think that is going to be the focus all of us have to put in the next few years to make this right.
Thank you. Thank you, Vinay. I think we are on time, right? Not bad. So I think, Vineet, we are going through so many changes, right? We had credit on prepaid, which is no longer permitted. BNPL scaled a lot, but it's not going to now going to be very different. I think it'll be primarily for banks offering or NBFCs offering for their current customers. Going to change a lot, right? Credit card, which was never a critical model, is going to scale up like anything. Increasingly for a smaller ticket credit card, right? More like a 10,000 rupees credit line, which is what will come up, right? And co-branding will increase. So things will change dramatically. So what's your view? What will work? What will not work? You see the system very closely. We work with so many entities. So your views on overall how the market will grow.
Well, we are in interesting times, I think, especially in India. A couple of statistics that keep standing out for me every time. I'm reminded every time that we talk about digital lending and everything. It's 54% of our population is under the age of 24. And two-thirds of them are below the age of 16. And about 80% of India's population is below the age of 44. So that puts a lot of digital natives on the planet in India. And that also opens up and answers the question why so much digital innovation and so much digital lending innovation is happening in markets like India. Whether it's BNPL, whether it's credit cards, whether it's different variety of these use cases which have emerged, they're all innovations. But if you fundamentally look at it, these innovations are being driven from the fact that how do you make credit simple from the consumption perspective, make it so simple, so easily and ubiquitously available to these new generation people that they can consume it. Now there is the retail side of that business and there is the business side of that business. So there's the B2C and the B2B segment. I think the buy now, pay later model, the use case, perfectly solves the simplicity and the ubiquity problem. It will continue to exist. We've run into some rough weather because, as the other panelists have pointed out, there was lack of self-regulation, there was lack of regulatory compliance, and the focus was mostly on growth and on lending, not getting the money back. Lending is about lending your money judiciously so that you can make profits when the money comes back. These models will continue, they will thrive, they will proliferate. I think what's going to happen is that newer forms of regulation will drive more ecosystem driven coming together. Different models like co-lending is happening now, will deepen more. The banks and the fintechs will come together even more deeply. I think right now what we keep talking about is mostly the fact that we should collaborate and fintechs and banks will come together and everything. I think the focus there will have to be on building the ecosystem and also on the fact that we will have to not just collaborate, but the banks will have to think beyond banking and open banking type of use cases, especially the beyond banking where the collaboration of the different financial entities is more customer centric. So I think BNPL or whatever else will continue, will get stronger. I think regulators are protecting the interest of every party involved in this, putting the customer at the center. Even the lenders are being protected. So I think we have a very bright future for the next 5-10 years.
Thank you. Thank you. And our time is up. Maybe I'll try to conclude with few pointers here. Do we have time for questions or no, right? Okay, yeah. Okay. So I'm taking a clue 2 minutes, right? So I think at a very, very broad level, I think two few thoughts on the banking side. I think the best part is all large banks and NBFCs have also realized the power of digital lending because they are partnered with so many. They are building their own strategies around onboarding their own customers. So we believe that 30% of the business will happen digitally for the banks themselves, right? So because they will go digital, almost every NBFC, every bank is going through that journey, and we see so many of them working together with others and us as well. So that's one part. On the fintech side, many of them are taking a more technical TSP kind of framework as well. So that segment will grow as well. Not many will go directly and try to acquire customers. So there'll be a change there. Embedded finance will increase because that use case is still available where any of those guys who are aggregating and have already customers, they will aggregate. So overall pieces, embedded finance will grow, partnership will still grow, TSP framework will grow, and bank and NBFCs will actually grow their own digital business. With this, we conclude now, or we have time for one question? No? Okay, I'm scared. Thank you. Thank you. Thanks a lot, guys. Thanks a lot. Thank you.